Dave Baker, CFO of Elemental Altus. Welcome back to the channel.
Hey, Pete, good to see you.
Yeah, good to see you. Look, we had a really good, productive chat with Fred at Beaver Creek, and some of the high notes he was talking about were repaying this debt down, being essentially debt-free by next summer, and you had a bit of growth coming through. I've since seen that your largest royalty is an expansion that we'll start seeing some even more revenue come through by 2026, I think, and there's also been the Mancha deal, so there's quite a bit to cover since then. Why don't we just start off with, I guess, over the basic, most people should be familiar with the story, but just who are Elemental Altus, and then we can dive into the other stuff.
Yeah, absolutely. So Elemental Altus, we are a TSXV listed precious metal royalty company, ticker ELE. And the real focus for us is on producing gold and copper royalties. So at the moment we have 11 producing royalties. This year, original guidance was $20 to $23 million revenue. That's going to change because of gold price and also the recent deal we've announced, and then we've got additional growth in the pipeline as well. Organics that's already in the portfolio. I think what also is what's interesting is, you know, a lot of royalty companies are diverse, but we're diverse. We're also underpinned by two real cornerstone assets. Yep. So that's Karlawinda in the Pilbara in WA, Capricorn Metals producing 120,000 ounces of gold a year, just announced that expansion. And Caserones, which is obviously Lundin Mining in Chile, producing 120,000 tonnes of copper equivalent a year.
Yeah, nice, okay. Look, so the one in Australia, I think they've just announced that they're going up 30% to about 160, that's by 2026. Obviously in the near term, it doesn't really change much in the near term, but again, another example of this model where you pay for something once and it continues to yield down the line, right?
I mean, it just shows the quality of the operator. And so we've known the Capricorn guys, Mark Clark and Kim, the ex-Regis team. They're really strong operators in WA, large open pit gold mines. They've got a strong track record of increasing production at previous mines that they've operated. So it wasn't really a surprise to us when we saw in Q2 that they announced the study work on this throughput expansion, and that they've now announced that they're going to go through with it. 50% increase in throughput. That's not all going to transfer to production. They're going to try and target some of the lower grade material, reduce rehandling costs. But yeah, looking at about 30% increase in production to 150,000 ounces of gold a year, but also maintaining that long mine life. So it's still initially a 10-year mine life, but plenty of potential for that to expand as well.
What does that do? So how much are you earning from that royalty today versus what you should be in, say, 2027?
Yeah, so on the current run rate, about current run rate, about $4.5 million a year. US, all US. Yep. And yeah, we'd be looking at maybe 30% on top of that. So yeah, it could be $6 million a year. And again, that's at a consensus gold price considerably above that. So plenty of upside.
Good. All right. Look, let's talk about La Mancha. They're 32% shareholder. They had a dilution right. You did a cap raise with someone else. They've now obviously activated that. Your market cap today, I think, is now
220 US.
220 US. I think it's about 300 Canadian, right?
Yep, correct.
What does that? I guess with the Mancha being in there at 32%, and now you have in this buffer of cash. Obviously, like I was saying, I was talking to Fred about paying down this debt by the summer. What's the plan with the cash? Does it pay down debt or look for opportunities?
Yeah, so it's really excited to talk about the deal that we've done. So we had a joint venture with a UAE fund called Altus, and so we had a couple of royalties in that. One is a royalty on Bonaco, operated by Allied Gold. And then two other producing mines in Australia, Ballarat, so the original Ballarat gold mine, and SKO, South Kalgoorlie Ops, and then a bunch of exploration assets. We ran that as a joint venture with this UAE fund. What we agreed to do, and we've now closed, is to bring that all in-house. So Elemental Altus now own 100% of these royalties. We have Alpha Stream, UAE fund, owning 14% of the company. So we did that for a $28 million all-equity deal. So then what that does is that gives the Mancha the right to top up. They've been a very supportive shareholder. So that's just shy of $13 million US fundraise, which means that now we've got just over $20 million in the bank, $20 million of debt that I think we'll be aggressively paying down, as you can imagine. But does mean that we're aggressively generating cash flow, and then we'll have a fully available $50 million credit facility to do with what we like for new opportunities.
Wow, okay. So just talk to me, so G&A at the moment is still relatively low for a royalty company, and I think we were talking before this, you were saying that you're aiming to get this even lower, down to about 5.5 next year. So in terms of the guidance that you released at the beginning of the year, I'm assuming given the gold price, you're well on track to beat that. Have you released your quarterly yet? What is that looking like?
No, quarterly's coming soon, so they'll be out on Monday the 17th of November. We will update guidance based on this AlphaStream transaction because they are producing royalties. We also need to assess what our largest growth royalty, Diba, which is the satellite pit for Sadiola in Mali, again operated by Allied Gold. That is coming on, that is producing. The question is when will first gold sales be? Thinking that's Q4, so we just need to assess what that's going to be. So yeah, we will update guidance there. But again, we were targeting $20 to $23 million of revenue. I think on the revenue side, we'll be comfortably within that.
Okay. Just trying to, obviously, look, you can't give too much away until you've released official figures, but with these new streams coming online, so what are you expecting? Have you released anything on what Diba might be yielding, or have you announced anything on any of these other assets?
So Diba is quite a large royalty, so it's 3% until 226,000 ounces are produced, and then 2% on everything thereafter. So no, very obviously got to take into account what Allied say, as the operator, but could very quickly become one of our largest royalties in the realm of $4 or $5 million a year. Allied have been very clear that they see the near-term growth potential at the Sadiola complex to be sourced from Diba and the high-grade oxide material that's coming from there. So no, I expect through next year that could be a materially large royalty for us.
And how does your revenue and your cash flow work? So you're saying 24 million, what's that, about $2 million per month, right? Does it work quite like that? Because you sometimes also get one-off payments here and there. So how does the cash flow of the business work?
Every royalty is a little bit different. Most of them pay quarterly. And so that we get our cash in arrears at the end of a month after the end of the quarter. Bonaco plays us monthly, which is a little unusual, but it's good because so we get to see a bit more on how the operations are doing. Again, Caserones is a little different as well from accounting treatment, but it's mostly quarterly that comes through. Yeah.
So when are you paying off debt then? Is that on a quarterly basis once?
No, so yeah, we lock in a rate every month with the bank.
But you're overpaying at the moment, right?
So we are. So at the moment we've got so we're 20 in the bank. We just received 20 in debt. So yeah, then we'll decide how much to roll forward when we get the notice from the bank. But again, it's a full revolving credit facility with National Bank, CIBC, and as our two lead main Canadian banks, and it's nearly instant access if we need to go and access it for transactions.
Is the plan still to pay it down and be completely debt free by the summer, or is now the plan? Now you've got a bit of cash and you've still got some leverage, is to go out and do some more deals? Yeah,
it's a very low cost facility, so we pay SOFR plus 2.75%. And we do get effectively SOFR if we keep money in the bank, so it doesn't cost us a huge amount to have that drawn. No, I think optimally for a royalty company, you be as debt-free as you can, and then you have all of that non-dilutive firepower to go out for transactions, so we can go out and buy royalties without having to dilute our shareholders.
Okay, all right, so the plan is still potentially be debt-free next year?
Yeah, and generating cash. Yeah, no, absolutely, and possibly by the end of the year.
Wow, okay. Are there any, in terms of your peers, are there any others that are debt-free and generating fair amounts of cash?
Not in terms of, no. I think we're unique in terms of the cash build, and to not be levered to that degree. There are certainly peers that are debt-free, but I think that combination of gold exposure, access to capital, so being debt-free, and I mean, will be material free cash generation next year at current gold prices.
Okay. What are you doing at the moment in terms of, because I think one drawbacks with the royalty model is if you're too over leveraged on just one asset or two assets, if anything goes wrong there, then obviously we saw obviously with Franco-Nevada when their copper project in Panama went offline, that they took a big hit, and that's obviously Franco-Nevada that have a lot of diversification, but still a core asset for them. How do you go about, I guess, look, there's nothing you can really do to mitigate the operating risk or the country jurisdiction risk there in that sense. You'd think an open pit like Australia, like your main asset, you'd think, fingers crossed, nothing would ever go wrong there. But what can you be doing? What sort of deals can you be looking out for now? You've got potentially no debt coming up, quite a lot of cash flow coming in. Do you still need to prioritise getting in more cash flow and assets, or can you start just building up this project pipeline now? How are you going to go about this?
That's a great question. I think certainly whilst royalty companies are diversified, there is a certain benefit to having consolidation in the right assets.
Yeah.
So you look even with Franco, obviously they've had their issue with Cobre Panama, but they're still incredibly concentrated on the Glencore streams like Antamina and Antapaccay, right? You look at Wheaton, there's 40-50% of their NAV is on Salobo, right? But obviously incredibly high quality, consistent assets that perform in the right commodity with the right operator that perform through the cycle. So I think there is definitely a desire to keep that focus on extremely good operators in the right commodities in the right areas. I think that diversification, though, will come as we grow. So when we listed, for example, Wagnon in Burkina was our largest royalty. Now it's on the second page of the presentation, still paying, still doing very well, but does fade behind a little bit behind Karlawinda and Caserones. So I think we would look to add more, at the right time, in the right stage, at the right price, these very high quality royalties, which shows for me the importance of having that capital and having that firepower available. So when you are at the right point in the cycle, when these royalties are available, then there's nothing stopping you going and getting them. So it means that with our debt facility, with supportive shareholders like Altus and La Mancha, is to be able to execute on some of these deals when they're available.
And are we in that right time of the cycle at the moment? Because obviously, especially for precious metals, obviously we're in, I'd say, still a fairly strong market. There's an appetite for companies to go out and raise traditional debt or raise traditional equity. There's almost this high gold price. Obviously, it helps massively on your balance sheet, but does it hinder you in somewhat going out and getting some of these royalties?
Yeah, I don't think anyone's putting $2,700 gold long term into the models, to say the least. I think people are quite sensible around consensus, but again, consensus is rising every month and catching up.
Yeah.
You're right. I think the right companies are still able to go and get finance. I think certainly we're seeing it with some of the bigger guys. So Wheaton, for example, I think have been extremely active in writing new streams. Montage one most recently.
They just wrote a $600 million check, right?
Yeah, correct, exactly. Yeah. So I think you are seeing where the streamers, the big streamers, I think did have a bit of a quiet patch for 18 months, 2 years. We're now seeing that starting to come in. Now, whether that trickles down to the smaller royalties, I think it will be seen. But I think we've shown that our ability to execute, this year, $30 million of deals, $25 million of deals last year, shows that we can grow that way organically, whilst also looking through the lens of portfolio acquisitions or M&A or more consolidation in the space.
How much do you now need to rely on third-party vendors like an Orion Mine Finance or a Taurus or someone else who's essentially added on a royalty onto an existing debt package or something like that? Is that becoming now a lot more of a focus? Because otherwise, I guess you're going to have to really go after the more single asset juniors that are going into production, have a lot more risk, whereas some of these guys still hold the keys to some of the larger, more well-established mines.
Well, I think that's the beauty of the model and if anyone asks, is there too much saturation in the space, you point to the private equity guys that are creating royalties, monthly. Yeah. So that these guys are always going to be out there creating new assets, and so long as they're uncapped and on the right asset with the right operator, then we're definitely interested. I think certainly now our focus is away from, as best we can, away from processes and away from competitive auctions, effectively, the royalties. We want to be using our network. We want to be using the connections that we built up over the last 5 to 7 years to really execute on really high value deals. Okay. But we would also look at larger deals, for the right strategic motive as well.
Good. And say you're a shareholder looking at this. Is the ultimate goal, say just a random shareholder sitting here, do you think the ultimate goal should be for a larger company to acquire you, or to do M&A, or just to carry on going on your own?
Well, look, we've had offers for the company before, publicly as well. I think generally speaking, there has been a point in the cycle where junior royalty companies are acquired by the larger royalty companies. I don't think we're right there at the moment. Yeah. Whilst the streamers are able to do $200-300 million streams, they're not going to do $200-300 million corporate transactions. But that will change. Look, we have a responsibility to our shareholders. If there's a market premium and it's sufficiently preemptive, I'm quite a large shareholder myself. I'd be very happy with that. So yes, I guess that is always the end game, is a high premium exit, but I think we've got a lot to do and certainly plenty of capital available and a serious pipeline that we think that there's more accretive deals we can do for shareholders to get that price higher.
Yeah. So more specifically, do you do M&A with a company of a similar size to you, sort of on a, say, like 50-50 or whatever the breakup would be, or would it be more value accretive to get stock in one of these larger companies? And it sounds like what you're saying is the larger companies are probably a bit too busy looking at large individual assets rather than sort of the smaller guys. They haven't really done any M&A in the small space, have they? So I guess that answers the question. That's more realistic, that M&A within the junior side to this royalty space is probably a bit more.
Yeah, we've seen quite a lot of it already. Most recently Deterra and Trident. Yep. Obviously our friends at Gold Royalty did a number of M&A transactions.
Yeah,
You saw
Metalla.
Metalla and Nova, for example.
Yep.
So you have seen it. There are a few of us left with a precious focus and with some cash flow and some very good assets. So there are natural synergies, certainly with combinations there, and you definitely note that the multiples for royalty companies get bigger and better as the companies get bigger and better. So, I think you'd be crazy not to try and capture that. But obviously, it's got to work for both parties. It's got to work, for shareholders, and we're all just driving forward, trying to get more growth and value for the company.
Good. All right. Look, talk to me. I guess let's finish things up. But where does this company go from this? Say, for example, we're sitting here in 12 months' time. Well, where do you think you're going to be, and what do you want to be able to tell me?
Yeah, so the real growth, so we were sort of just shy of $18 million of revenue last year. We'll be, let's say 23 this year, which is within the range, the guidance. Yeah, within the guidance. Right. And could be conservative, yeah, exactly, but within the range of current guidance.
Yeah.
With the real growth from that's been Monaco. So we'll be about $4 million revenue this year. Obviously, gold price helping us out as well. We've now doubled up on Bonaco, so Bonaco is going to be within the realms of $8 million of revenue next year. Okay. We're also going to get Diba, and that's now producing. We're going to be selling the gold there. That's going to be a material asset for us over the next, I'd say, at a minimum 3 years, but probably more. We know they're drilling down there. We know it's a focus, and so that's really what takes us into the 30s in terms of $1 million of revenue. Then beyond that, into 2026, as you said before, we've now got production increases at our largest gold royalty, Karlawinda, taking that to 150,000 ounces a year, which then could take that into the $6-7 million of royalty revenue. So that then takes us beyond 30, possibly beyond $35 million of royalty revenue, with the same cost base. Yeah. With great assets, great operators, still drilling, still exploring, pushing mine life out. And that's before we do anything else.
Good. All right. David, thank you.
Thanks, Peter.